So today we're going to be going over Google or Alphabet's evaluation. So right now they're at 2.04 trillion, and we're going to jump right into this one. So these are the different segments we're going to be breaking down today. Basically, I'm going to break down each segment, go over their net income, and the price to sales ratio that I personally believe they deserve. This might have a little variance, but I think it's pretty fair. So we have Google search. This is their biggest. This is 50 billion a quarter in revenue. That's a lot. And then we have YouTube, which is their second biggest. I'll explain what they do if they're a little bit more confusing, like Google AdMob, but like Google search, everybody knows what that is, so I'm not going to really explain it too much. So YouTube is what we're on right now watching this video. It does about 9 billion of revenue per quarter. We have Google AdMob, which is it's explained a little bit deeper in the video, but a little understanding. This is basically Google ad for mobile, is what the MOB stands for. That's mobile ads. So this is basically a thing they own for advertisement on phone. It's pretty cool. And then we have Google Play, which is basically the Play Store, similar to the App Store, but for Google's Pixel phone and Android. So then we have Google Cloud. This is their fastest growing business with 28% revenue. And another thing I was surprised by was Google Play growing 19% year over year revenue. That's not pretty impressive. And then we have other. This is their other category. This has mainly Waymo and a bunch of small people in it. So we're not going to go too much into those, but we'll go into Waymo. So we have Waymo right here is the one that was not included. So that's why I included a picture, just so you know that's one of the things we're going to jump into today. So Google search right here. This is 202 billion a year in revenue, right? And does about 120 billion in net income. This is their most profitable segment. Has about 60% net income margin. It's insanely profitable. And for the day, because everyone's saying, "Oh, we're scared of Google search. We're scared of Google search," right? There is a 12 price to sales ratio on this. I'm going to put it in 12 price to sales, insanely low. I don't even think you could argue any lower than that because all of the ChatGPT, the antitrust lawsuit, everything like that's priced in already. 12 price to sales. Okay, we're going to jump in the other segments. YouTube. So the best comparison for YouTube is Netflix, right? Netflix revenue does 45 billion. Their Netflix net income is 12 billion, right? But their market cap is 530 billion. So 530 million times divided by 12, which is their net income, is how you get the price to sales ratio. YouTube's at a 44 price to sales ratio. 44. And you're telling me YouTube can't demand a 35? Look at their stats. 46 billion in revenue, 45 billion in revenue, 11.5 billion net income, 12 billion net income. YouTube's literally the equivalent of Netflix. Netflix, I said, is a 44 price to sale. I gave YouTube a 35. Netflix does have the premium, the subscription here, but so does YouTube. YouTube does have the YouTube Premium, so that brings a little bit of safety in. But YouTube is a little bit more reliant on ads than Netflix, so that's why then I wanted to be conservative. So we gave him 35. We have Google for ads for mobile. This is what I was going to go in a little more detail. This is the one I personally needed to do a little catch up on. So AdMob is a mobile advertising subsidiary of Google, originally founded by a Syrian entrepreneur Omar Houmani. The name AdMob is a portmanteau for advertising on mobile. So this was founded in California, and this is basically advertising on mobile, like I said earlier. It's pretty interesting. I thought this would just be considered on their advertising platform, but I didn't know it was such a big thing. So this does 9 billion in net income, about 30 billion in revenue, and 9 billion times the 20 price to sales is going to be 180 billion. I think it's a pretty fair valuation. It's very stable. The only reason I gave it such a low price to sales ratio of 20 was because it only grew 2% last year. If it grew faster, absolutely, I'd be jumping that up to like 25 price to sales, but slow growth, you You don't really want a company that's growing slow. So slower segment, but just a cash machine, $9 billion. So we'll take that. And it's built into the devices, similar to the App Store. App Store is literally a cash cow. Everybody loves the App Store. Everyone wants to talk about it. And glaze Apple like, oh, it's such a good toll booth business. But Google has that as one of their small segments. So then we have Google Play. This is the Google Play Store. They get, similar to Apple, they get a little fee for every time someone spends money through the Google Play Store. They show ads on the Google Play Store. They allow the apps to promote on the Google Play Store, and then all brings in revenue. So this is another pretty profitable. Google Play has about a 40% margin on this Google Play Store, and does about $18.8 billion in net income. It is almost $50 billion in revenue. Really is fascinating how big Google actually is. Like $47 billion, and nobody even thinks about them owning Google Play. Honestly, at least I don't. I think of Google Search, YouTube, Cloud. That's it. So, but we're only giving this a 20 price to sales. Honestly, this is the one that it definitely should be higher. I think 20 is really conservative. I think we could easily bump that up to 25. We grew 19% last year. Easily going up to 25 there, but 20 is very conservative. I want to be conservative with this estimate for my personal evaluation and my personal how much I think I should be willing to pay for Google. So, Google Cloud is going to be $50 billion of revenue, and that's about $5 billion of net income. There's only about 3 big players. You have Salesforce that has like 3% market share, Google with 20, Microsoft with like 25, I believe, Amazon with like 30. It's very like 3 companies own the cloud business, and Google's one of them. So this is it's not insanely profitable. It's honestly bringing their net margins down, but it does make a lot of revenue. So, and it's fastest growing. It's growing 29% last year. So profitability is skyrocketing, and this is only going to grow very fast for Google. And I love this part of their business. So, and then we have Waymo, which did about $350 million in revenue, is probably what they're going to do about this year. And they do 250,000 rides a week. They just announced they're expanding into Atlanta, which is pretty cool. And their current funding evaluation is about $45 billion. They're unprofitable, so I'm using their funding evaluation, which is pretty common. I mean, like ChatGPT does it every time they raise funding. When you invest in them, they have to have a valuation, and the current evaluation is $45 billion. So we do Google Search at $120 billion in net income. 12 price to sales is $1.44 trillion. We have YouTube, that's $11.5 billion. Or a pretty price to sales is 35, which is pretty fair. $400 to $2 billion there. We have Google Advertising on the mobile, which does $9 billion in net income. 20 price to sales, $180 billion. Google Play is $1.18 billion. Then we have Google Play with the 20 price to sales is $367 million. Google Cloud with $5 billion, price to sales of 40, which is pretty fast, pretty high, but I mean they're growing 30%, so that's pretty fair. And then their valuation and their infinite profitability too. Evaluation's $200 billion on that, and then Waymo's coming in at $46 billion. Their market cap is $2.635 trillion, and that's barely including Google Search. Google Search at a 12 the price to sales, and people are not buying Google. Google's at, what was it, 2.04 trillion, and fair valuation in my books is about 2.6 trillion.